I'm Wendy Kirkland, and I'm going to talk to you tonight about a couple patterns that I discovered. They are part of the price surge system, and I'm going to show you how you can see when an equity is getting ready to make a quick volatile move. For those of you who don't know me, I'm a full-time trader. I've been trading for about 10 years. I administer 6 advisories, and I've written a number of books. And the main one that I'm going to speak to you about tonight is called Price Surge System, and it's a swing trading strategy that trades both long and short. Okay, went the wrong way here. All right. We all come to the market by different paths. And for some of us, we maybe had somebody involved in the family. Others of us, it is our education. Perhaps we're in the banking business or some other financial aspect. And others come by financial need. And that is how I became involved in options. That back in 2004, my husband and I had a gift shop, a retail gift shop, and Hurricane Francis and then Hurricane Ivan came through and dropped so much rainwater, and they opened the floodgates to try and control what was happening, and our business was flooded, and it wiped us out. Everything we had, the shop had been open 20-some years, was involved in that business, and we had no income other than the shop. We had children and homes and payments and so on. And a friend told me about option trading, and I took a couple classes and found that it was a great fit for me. And that is how my education started. That initially my personal goal was to become financially independent. And ultimately, that desire grew to sharing and helping other people to achieve the same objective. And so I have done that through books and weekly newsletters and coaching and so on, and doing webinars like we're doing today. That one of the questions that traders ask is, how do you end up winning the majority of trades that you enter and not having the majority of them end up either being flat, getting stopped out, or losers? So the elements of trading success that I have found is, one, the leverage of options. Then in addition to that is buying weekly option expirations and trading equities that are primed for explosive moves. And you do that by zeroing in on these patterns that I'm going to show you tonight. So let's take this kind of step by step. That many of you maybe don't even know what an option is. And so there's 2 types. Call options you get into those when you expect the price of the equity to rise, to go up. And they give you, the buyer, the right to require the grantor to sell the equity to you at the agreed upon price on exercise at an agreed upon time, no matter how high the price is at the time you choose to sell it. And put options are options that you purchase when you expect the price of the equity to go down. And this gives the buyer, you, the right to require the grantor to buy the equity from you at the agreed upon price on exercise at an agreed upon time, no matter how low the price is at the time you choose to sell it. So for me, my thought, my feeling about it is that options hold the key to financial independence. And part of that is the leverage that they give, because you are being able to purchase options for what would be like a down payment. And so let me give you and read through this as an example that what we're going to be discussing here is potash, the fertilizer company. And let's say on February 3rd, the stock price was $15.50. And then on February 4th, it rose to be $16.81. So that's a $1.31 gain or a 9% gain in price. Excuse me. On February 3rd, the February week 2 16-strike call option premium was 40 cents per share. So that's $40 per contract. On February 4th, the bid when you want to sell is 91 cents per share or $91. So that's 125% gain in just one trading day. So what we have to compare here is a 9% gain in the stock's price. That's very nice. But for the option, it was 125% gain. And that's the leverage that I'm talking about. So had you taken the same $1,550 that 100 shares that were covered by the options, let's say you bought 100 shares of the stock, and that earned the $131. Or you could have, for that same total investment, which was $40 for just the one contract, you could have invested and bought 40 contracts and have earned $2,000 during that same one-day trading period. And so that is the leverage that I'm talking about that kind of can change your life, can change your financial circumstances. And what you want is to be able to get the direction of the trade right. And that is what I'm going to show you with my patterns. But we have a couple others of those keys that we started looking at initially that we are going to cover first. So this is potash's stock chart. And this depicts the area that we were talking about of getting in here on February 3rd and exiting on the 4th. Okay, and so what about this chart would have told you that there was going to be this big explosive move, that it had a nice drop? We can see that it has had drops numerous times. So what set this apart? And that's what we're going to look at in just a minute. So the second success element was weekly options. And the reason there is all kinds of advantages to weekly options. And they've been around for about 11 years, and yet they've really only become popular in, say, the last 5 or 6 years. And that really makes them new enough that traders still just don't get the advantages of them. So I would like to cover some of those very quickly. But because of the technical difficulties, I'm going to skim this really, really fast because I don't want to hold you up. That we lost about 20 minutes there, and I know for some of you it may be getting late. So in trading in general, and trading options, we've been taught not only the value of time, but also to make sure that we have purchased extra time so that our trades have time to unfold and to play out. And that isn't the thinking behind weeklies. With weeklies, the aspect works kind of in reverse. We are not looking for extra time to allow the trade to play out, but providing we get the direction right, we're seeking protection against the market's change in direction. We want to catch that explosive move and then get out. Not hang around for it to pull back for a little while to retrace 50% or so and then get back in again, that we are just looking to capture those quick moves. So the next couple slides here are going to show some of the advantages of weekly options. They are cost effective. They have great flexibility. Long-term trades are subject to changes, where short-term trades, like I said, you're trading what the market hands out and you're zeroing in on those moves. Since weeklies are new every week, a trader can pick and choose the exact time that they want to enter a trade and take advantage of these cheap costs and so on. There's no need to tie up capital for a long time. You can enjoy 52 expiration periods a year because there's new weeklies each week. Weeklies are available on stocks, indexes, ETFs. The exchanges offer weeklies, new ones, on new companies all the time. Not every equity has weeklies. Many do now. That the number continually grows. 1 week a month, all optionable equities become a weekly. That's on the 3rd week of the month. Weeklies are a short-term chartist dream because all you have to do is ask yourself, where will this equity be in a week or less? The shorter term allows for more accuracy. They can be used in conjunction with the various news reports. They remain more reasonably priced during periods of high volatility. And once the news is released, they suffer less of a volatility crush. When the implied volatility changes in the equity's premiums price, it experiences less of a issue than, say, monthlies do. The Greeks' weeklies inherently have a greater delta. They don't suffer from high theta, which is the time value issue. Cheaper prices mean you can purchase more contracts for the same total investment. Additional benefit is the gamma is explosive with so little time value. And quick price moves before the market can change direction helps to compound the benefits and the leverage of option trading. And then just a few weeks, a few months ago, the exchanges have been given permission to extend weeklies out 5 consecutive weeks. And that said, you know, sometimes you might want to buy an extra week of protection, and yet you don't want to go out too far because then you might as well be buying a monthly. So from the get-go, my personal goal was to help other people achieve financial independence so that I could share the blessings that I have found. And I have done this through utilizing weekly options, tradable patterns, and this is done through strategies that I've written about. But the strategy books that I write come across like you and I are talking across the kitchen table. I have cut out a lot of the technical jargon that a lot of times is just in there to confuse people, but I include all the steps that are needed to open and close profitable trades in 2 or 3 days up to maybe a week. And of course, there's always a few losers, but when you apply stops, close the losing trades quickly, then the winners outpace the losers. And I do truly hear from traders every day who are experiencing great success using these patterns. I consider myself to be the everyday retail trader. I didn't have the financial background that a lot of traders do, that I figure I'm just kind of the mom and pop trader. But I bring to it something different. I was an artist in the gift shop. My husband and I carved decoy ducks and birds, and I painted. And so I have a different view, and I consider myself to be just the average trader, and I invest a modest amount, $500–600 per trade, and often am able to double that. And that is what we're going to look at now. We're going to dig deep here into the specifics. So it's not just the option leverage, but it's also the weekly option leverage. And so at some point along the line, I figured out that a 2.5% to 4% equity price move in the equity, whether it's an ETF or a stock, will often equate to about a double in a weekly option premium. And so we're going to look at Boeing. That had we purchased calls midday on January 28th for $1.75 a share or $175 per contract for the February week 2 121 strike call, and let's say we bought 3 contracts, and that would be a total investment of $525. That kind of fits in where I was saying about the $500–600. And we sell at the end of the day on February 1st. The call contracts were worth $4.25 or $425 per contract. So that is a total gain of $250 for each contract, or $750 for the 3 contracts that we bought, and that is a gain of 143%. Now, when we entered the trade, Boeing's price was approximately $115.09, and we sold it was $121.56. So that's a $6 change in price. That's a hefty 5.2% increase in the stock's price over those 2 days, and yet the option increased 143%. So again, that is the leverage, that here you were able to invest a fraction of the price of what the shares were. That had you bought 100 shares, it would have been a hefty investment, and yet what we invested was $525. So this is how it compounds, and it really ends up giving the everyday person the opportunity to participate in the market at a reasonable price and yet have substantial gains. So here's Boeing's chart for the trade that we just looked at. So if you look at this, what's going to tell you that this is ready to explode? Looking here at the most recent period, I can see it had a big gap down on the 27th, and then it rose up part of the way and back down again. And if I look back, I can say, well, here's another gap, and it dropped down and it went back up a little bit and then just kind of flattened out. And then we have the most recent period. Here's another gap. So what would tell me? So let's start adding some indicators. The indicator that I've placed at the bottom of the chart here is the PPO. That's the percentage price oscillator. And it works quite like the MACD or MACD that a lot of traders use, but the formula is different. I like it. It's a little more reliable. The way you read this indicator is that the black line over the red line signals the direction that price is going to move. So here we can see on the 20th, the black line headed over the red line, rose up, and we look up here, we can see that after it did, price rose up. We can see here that it flattened out and wiggled back and forth a little bit. I call this braiding, like the braiding of a girl's hair. Then it moved back up again. You can follow again that it dropped. It rose and then it dropped when it crossed down here. So this is a very easy indicator to read, and it gives you the indication of the direction of price. So we're going to add to this now. So the second indicator that I've added is called the ADX, Average Directional Index. Now what this line is that you're seeing that is moving up and down here is a momentum line or a strength line. It doesn't really tell you what direction the market is going. It just tells you the strength. So right here you can see on the 26th, you can see this rising line. If we look up here, we can see that's when that big drop was. So it is indicating that the bears have control and that it is doing so with a lot of momentum, with a lot of strength. What I discovered was this pattern that is right here, and you're going to be able to now spot it very easily. The PPO, the one that's on the top here, has nothing to do with the ADX that is here on the bottom. But when these two lines come close together like this and then push away from each other, and there are some other confirmation signals that you want, but we're going through this really fast. But I'm going to show you what happens. When these lines come close together, I call this a squeeze. When the lines squeeze together, price is going to go up. So here's the squeeze. It's just taking and giving you more time. This is the pattern that we just looked at. So those lines squeezed together, they pushed away from each other, and price, this is the period we were talking about, and this is where we exited. Price goes up. Okay, I'm going to add to this now. This is a second pattern that I have discovered, and this is where the artist in me comes out. I see things differently than traders do that are just looking at numbers. I also discovered when these lines run parallel like this, this is another stage. And I call this the sweet spot. And there's stages all the way from here to here that are all tradable. And that is what the price surge system book teaches you. But see, when the ADX is rising and the black line of the PPO is rising, they're running kind of parallel. It's a subjective, objective thing here where, you know, yeah, but they are. They're both heading up, and that's the point. Here's another entry. You could get in here, exit there, and that is a move from, say, 117 something up here to 124. That's a $7 move. That's awesome. All right, here's some additional patterns that I just want to show you very quickly so that you don't think I'm just talking out the top of my head here. So here's another squeeze. You're going to be able to start spotting these. This one had a nice rise. Here's one that squeezed together and price rose for a day or two, but it kind of went flat. And so this is where you want the confirmation signals. Here's another squeeze where it kind of went flat. Here's an area, I'm going to back up a little bit, where you had the ADX and the PPO both heading up, and that was more of a move. You had that same right here. You had the PPO moving up, and you had the ADX running parallel to each other, and that's where you had this big move. All right, I marked them on the chart. Here's a squeeze, lines pushing away from each other. Price went up. Here the lines, again, pushed against each other, went up, and then we also had that parallel pattern, another parallel pattern, and here's another squeeze. This one is a newer pattern, is just kind of getting started. Okay, here's a new squeeze on the point I was going to show is here on the very right, that you had a nice super tight one right there, and the lines pushed away and had this nice big move. This one got started and didn't go very long before it failed, and I call this re-squeezing. And so now this is setting up again. This is DuPont. Okay, this is that same pattern. The lines push away and then started running parallel. And look at that move. That's a beauty. Okay, so this is the details of that trade. Remember, I told you that a 2.5% to 4% equity move often equates to a double in a weekly option premium. So on the chart that we just were looking at, purchase calls mid-trading day on the 29th of January for 179 cents a share, $179 per contract for the February monthly 51 strike call. And let's say again that we bought 3 contracts for a total of $537, and we sell at the end of the day on the 5th, which is 6 days later. The premium was then $8.22 per share, or $822 per contract, or $2,466 for the 3 contracts that we bought. So that is a gain of $1,929, or 359% for those 6 days that we held that trade. Now this is saying HD's price, and it should be DuPont DD's price. So that was a 13% increase in that stock's price over those 6 days. So you're comparing a 13% increase when you would have bought the stock and being paid full price of the $51.50 for 300 shares. I think that would amount to about $15,000, and yet you spent $537, made $1,900, and it was 359%. That is the leverage of options. That's the leverage of weekly options. So we have looked at a number of patterns very, very quickly here, showing long trades. So there's also patterns, yet going to ride this up and down. Here is a pattern with the ADX and the PPO. You have the PPO crossed down, has kind of come close here. The lines have squeezed together a little bit, and then they flare out from each other, and you have a big drop. So when you see a chart like the one that we have here, where the lines have come together, are pushing away from each other, you want to look for the confirmation signals, and then you're apt to have a huge winner. That not every squeeze is the same. You want to be sure that you have those confirmation signals in place. They are just as easy to read and see. This is all explained in the Price Surge System book and DVD. All squeezes, like I just said, are not the same. Here's a very nice one. The lines got started. It kind of weakened out here and then spread again. And you look at what happened with the price. It did go up, but in the long run, it just went flat. And the confirmation signals would have kept you out of this trade, so that you didn't have your money tied up. We are looking for the ones that are primed and ready for the explosive moves. Here's another one. Look how nice that is. The lines pushed away and spread apart. The confirmation signals would have kept you out for this whole period of time until the setup and was really, really ready to go. So you end up learning to be able to pick the trades that you're going to get into. Here's an example of Joy Global. This actually has 2 squeeze patterns on it. Here's one, and this resulted in about a $2 move, which was the 4% move. So that equity would have doubled just in this move. Or here's another one that played out. This worked out to be more of a 9% move, and this rise, it was like a $4 move. And so you would have had several 100% gains in that one. So the book goes over all of the details, all of the stages of the pattern, everything that you look for, how to set up the charts. And the point is why reinvent something? Here you have a trader like me that might very well be someone who is a trader quite like you, and the patterns are all there for you to learn, to be able to recognize. And this way you just end up duplicating the success of other traders that are like you. You learn the long and the short patterns, you apply them to every chart, you ride the waves up and down. This is a great strategy for new traders that are new to options, and yet the patterns are proven and can be used by experienced traders. The key elements are the weekly options or buying front month. You follow the strategy guidelines as to open interest, volume, the bid-ask spread, and all of this is covered in the books. You're selecting options that have the greatest chance of producing the leveraged results that we're talking about. You can trade stocks or ETFs, and you concentrate on those that are going to have big moves, and the book covers how to do that. You have the pattern setups with the confirming indicators, and you only enter those that have given the confirmation, and you learn all of the stages, and the stages of those patterns will tell you not just when to enter, but when you have the possibility, we actually even discussed that, a second entry, when to hold, what your stop loss is, and when to exit. And with the price surge system, this is not like giving you a book and just saying, you know, there you go, you're on your own, kid, now you're all set. There's also a weekly newsletter that comes out twice a week on Monday and Wednesday that lists trade candidates that are starting to form these patterns. So you look through and you say, well, this one's too expensive for me, this one I like this sector or whatever, and you see that, oh, here it's making a squeeze pattern, well, there's your confirmation, and you can then enter. That it's not like you're having to go through thousands and thousands of stocks trying to look for the ones that are setting up these patterns. This is how you get in touch with me. I have a website, wendykirkland.net, phone number. And for those of you who have so patiently put up with the technical issues and my babbling on here, there is a special offer as far as the price surge system. And that is going to be posted, I think, in your the chat room there so that you can actually link on it. That I don't think this is a linkable thing, but it is. It's tradewinds.com/price surge webinar, and that will take you to the special offer. I'm not sure exactly how to end this. I appreciate so much you all attending and coming in and putting up with the technical difficulties. I know that TradeWinds always records these webinars, and so this will have been recorded and will be sent to you, and I imagine that it will go out to you tomorrow. If you have any questions, you can contact me through the phone number, or you can send me an email through wendykirkland.net. Thanks for coming, and I hope you enjoy the information.